And now, The Money Show
with Stephen Grootes on 702.
Let's walk the talk.
The Money Show with Stephen Grootes is brought to you by ABSA Corporates and Investment Banking. ABSA is a proud lead sponsor of B20 South Africa 2025. Good evening. Welcome to the program. I suppose today we'll speak to the SPAR CEO in just a moment. Looking forward to that conversation. I would like to know from you, though, if you and your family have a particular supermarket chain that you would prefer. Let me be very clear. You go to a mythical shopping mall somewhere, you're driving through the country and you find yourself, I don't know, somewhere just south of Mangaung. And you think to yourself, okay, I'm going to this shopping mall. It's massive. It's got all four of the big supermarkets. So you've got Spar, you've got Checkers, you've got Pick n Pay, you've got Woolworths. Which one do you go to and why? Be very interested to hear from you this evening. So all the supermarkets keep telling us all the time why you should go to them. Which one do you actually go to and why? Would really like to hear from you on that. And is there a particular reason? Has something shifted? Is it about price? Is it about location? Do you just prefer this colour to that colour? 011 8830702 021 446 0567. I was very interested today. A conversation has really sort of entered, I think, a new gear. And I'm talking about black economic empowerment. It's a conversation that I'm surprised we actually don't have more often when you consider what it is and what it's trying to do, what it's sort of trying to redress. I noticed over the last little while, there have been quite a few critics of BEE. I think this is to be expected if you consider the Trump administration, if you also consider that opponents of BEE are now in the coalition government. But there have been very few people outside of sort of political parties defending BEE. So I was sort of pleased in a way to see John Dludlu from the Small Business Institute writing in Business Live today, defending BEE, just to make sure that there's an argument. I mean, one of my jobs is to make sure that there's an argument, and it helps if people are presenting the sort of various sides. And trust me on this, there are more than two sides to the BEE argument. So one way or another, I do get a sense we're moving into a different phase around the discussion around BEE. Your views this evening. Also, voice notes 072 702 1702.
The Money Show
With Stephen Grootes, live on 92.7 and 106 FM. Streaming on the Prime Media Plus app.
and DSTV channel 856.
Well, some interesting numbers out of SPAR today for the 6 months to the end of March that I think tell us quite a bit about movements in the supermarket sector. SPAR raising its revenue from its South African operations by 1.9%, like-for-like sales up 1.6%. And you know how competitive the supermarket environment is at the moment. Angelo Schwartz is the CEO at the SPAR Group. Angelo, good evening. I do appreciate the time. You talk about a tough environment. What's making it so difficult at the moment?
Hi, Stephen. Thanks for having me. Yeah, it has been a tough environment. There are a number of factors that influence that. Bear in mind that we have significant operations offshore, particularly in Europe, and certainly there's a cost of living crisis in Europe that has made those markets tougher than I can remember. And in South Africa, we've had an economy that's struggled to grow for some time, and consumers under real financial pressure. With relatively high interest rates, albeit coming down. All of that putting pressure on disposable income.
There's been a bit of analysis today, I'm sure you've seen it, I'm sure you were asked about it, that you might be losing some South African shoppers, upper income shoppers, people with a bit more money, perhaps to some of your competitors. Do your numbers bear that out? Is there a sort of a band of shopper that you're losing?
Look, I think there's certainly truth in the observation that the growth in our stores that cater to the lower end of the market has been more robust than our growth at the top end of the market. Certainly been a lot more competitive at the top end of the market, certainly for us. So I think there might be some truth to that. I don't think it's set in for the long term, but that's certainly what we've experienced in the short term.
Price is a major issue for almost everyone. And I looked around in your documents today to try and find a figure to indicate what I suppose you would call internal inflation, how your prices have been moving. So for ShopRite, and I'm sorry to mention your competitors, but ShopRite, their internal selling price inflation to the end of December last year was 1.9%. For Pick n Pay, the equivalent was 2.1%. That was until the end of March this year. I couldn't find your figure. You know your results better than I do.
Yeah.
Do you know offhand what your internal inflation was for this period?
Internal inflation for groceries was just over 2%.
Okay, so for groceries was 2%.
So fairly subdued. Yeah, slightly higher for our building materials business at just over 3%.
Are you trying to compete on price? It's very, very tough out there. I realize that, and low food price inflation makes it even harder.
Yeah, I think all grocers and supermarket groups prices is quite important at the moment, and I think to some extent will always be in an economy like South Africa. So we definitely do compete on price, although we don't think that's our primary goal. We pride ourselves in the fact that the majority of our stores, the vast majority of our stores, are privately owned by families who operate in the communities they serve, and by and large live in the communities they serve. So I think our ability to customize and to talk to the consumer in a way that they're familiar with, and genuinely partake in the betterment of those communities is really what we pride ourselves on.
One of the big problems you've had over the last couple of years is around the implementation of an SAP program. And I mean, the problems around it, you've sort of been added to a long list of companies who've had similar problems with similar IT projects, Angelo. I think it was 1.4 billion rand already it's cost you. How's that going now? I mean, IT people will tell you, no, we'll fix it, but we all know what happens next.
Well, IT people say, unplug the PC and reboot. And that didn't quite work in this particular scenario. But yes, it has been a tough road. We lost 1.4 billion worth of revenue, not quite that amount in profit, but it certainly has impacted our profitability. The last 6 months has been much better. We've only implemented the system in our distribution centre in the KZN area. And that distribution centre has operated profitably every month this year, which is quite a turnaround and is settling nicely. Although the business is still not up to its historical norms in terms of operating margin, but we're well on our way to getting back there, probably 65 to 70% of the way back to normal profitability in that facility, and a lot more confident as we embark on a further rollout of the system.
Your business in Switzerland, and I've actually shopped at one of your outlets there long before the pandemic, and it did remind me of a Spark, yeah. But you seem to be finding it quite difficult to find a buyer. I understand the problem there is that if you live in Switzerland, you also live close to France or Italy or one of the neighboring countries, and for various reasons, you can actually buy a little bit more for your money in those countries. You're obviously finding it very difficult to find a buyer.
Stephen, I wouldn't say that. I think it's taken us quite a while to determine whether we were best served strategically to dispose of that business. Now that we've made the decision, we are quite a long way down exclusive discussions with a particular buyer, and really hopeful of tying up that agreement relatively quickly.
Okay. Here, back home, the home delivery business, I mean, you see people on motorbikes all over the place. I don't quite see, Angelo, as many Spar motorbikes as some of your competitors. Are you behind a little bit in this business? It does seem to be, I mean, it may not be the future of retail, but it does look like it right now.
Look, it's certainly a significant part of the retail basket going forward, and it's a channel that I don't think will go away. If I look at mature markets, particularly those in Europe, and to some extent in the States, there is a ceiling where the potential for online delivery, and particularly on demand, tops out, and that seems to be in mature markets somewhere between 10 and 12% of sales. So it's certainly an important component of your trading mix, and I think we have been behind the ball. It took us a bit longer to launch our platform than our competitors. We probably launched 2 years after our main competitor and lost some ground. But quickly making up ground, offering the service now in quite a lot, over 500 stores now, and delivery volumes up 170% on the platform, off a low base, which is I think what you infer. But there is definitely growth there. But bearing in mind, we also have entered into a strategic partnership with Uber Eats, and that has worked quite well. We're still in the early stages. We entered that partnership 3 or 4 months ago, and we're up to 130 stores offering Uber Eats now, which I think has great potential for us.
As a South African CEO, Angelo, how confident are you feeling about the future? There are business confidence figures coming out today that actually suggest many people who run businesses are, frankly, hanging their heads a little bit. Do you have any optimism or hope that things are going to get better for businesses in South Africa in the rest of this year, the rest of 2025?
I guess, Stephen, I'm an eternal optimist. It's particularly when we think about our country. I think South Africans are a resilient bunch, and I guess that's a cliche these days. I think we do take it too close to the wire sometimes, but generally, as a nation, we pull together when we need to most, and certainly I think in many ways we are on the right track, despite some of the noise around things. The environment is difficult, and I think there is structural reform needed in our economy. But there are a lot of things to be positive about, and because of our business interest in Europe, I spend quite a bit of time outside of SA, and I can certainly tell you every time I get home, I'm reminded of what a great country we live in, and always happy to get back here. And just because of that, and the nature of our people, I think it's hard for me not to be positive about our country, despite our many challenges.
Angelo Swartz, thanks very much indeed. Really do appreciate the time. The CEO of the SPAR Group. Well, let's get a little bit more from those business confidence numbers. The RMB-BR Consumer Confidence Index suggesting that actually there are very few eternal optimists around. Zion Klung is the chief economist at Rand Merchant Bank. Zion, good evening. Good to hear the CEO of SPAR is feeling confident, but it doesn't seem that many other people are.
Look, thanks, Stephen. We're talking about the business confidence, which means this is a survey of business executives that make decisions on investments across different sectors of the economy. And what it shows is 40% of the surveyed business executives are satisfied with the prevailing business conditions, which means 60% remain quite pessimistic. And that's quite a large number. And we would understand, if you just look at the survey period, it was from the 7th to the 26th of May. We had quite a number of developments. Locally, we had issues with the budget, with the uncertainty around the government of national unity and whether it was going to be sustainable or not, given the disagreements around the budget. But also globally, we had the Trump trade tariffs that have been suspended for 90 days. Nonetheless, from a trading perspective, uncertainty still remained. And we had South Africa-US relationships that were quite tense. All of those things played a part. But if we were to look at some of the subsectors, manufacturers at 33, a slight decline of 1 point over the quarter. Building contractors at 35, a 10-point decline. Retailers at 42, an 8-point decline. And then new vehicle dealers that saw a significant jump in the first quarter of 29 points to 52. They have declined by 10 points in the second quarter to 42. The only sector that registered a number that is 50 at a minimum, which is the break-even, is wholesale traders, which was an increase of about 8 points. A reversal or a partial reversal of the 18-point decline that we saw in the first quarter. But overall, the picture is quite concerning. When you have 4 of the 5 subsectors declining in the quarter and 3 of the 5 declining for a second consecutive month, it just says to us, economic activity momentum has slowed significantly.
I mean, in a way, I was looking at these numbers and just continually reminded about yesterday's GDP figures. I mean, the mood kind of matches the economy. And the problem with that, of course, is that if people are not optimistic about the future, they won't invest. And this is a point Adrian Gore makes all the time.
Indeed, we would have, had a sense from the first quarter numbers, it stagnated at 45, following the same reading in the fourth quarter of last year. So that would have told you already that the economy did not grow, which is exactly what the GDP numbers that were published yesterday have indicated. A 0.1 on a quarter-on-quarter basis just means the economy has stagnated. And to your point, when business executives are uncertain about the future, they hold back in terms of investments. So this is a leading indicator of gross fixed capital formation that we so need, that is a big driver of overall economic growth. And the trade tensions globally also do not help, because it's difficult to decide where do you locate your manufacturing enterprise if you don't know if you're going to be able to access other markets from that particular location. But what is more important from a South African perspective are the economic reforms that we need to do. What needs to happen for us to see confidence lift, for us to see the investors locally that are being surveyed becoming more optimistic and putting money in the South African economy. We need the structural economic reforms to be implemented quicker. So that is, roads, rail, ports, the water sector. We need safety and security to be just assured for sectors such as tourism that can attract a lot of tourists, which generates low skills employment that we so need. All of those things, if we were to do them quickly enough, the plans are there. We don't need new plans. We just need to implement the existing plans quicker and much more aggressively. Confidence and investment and economic growth will follow suit.
I mean, you could probably have said that all the way back to the National Development Plan in 2012, Isaiah, couldn't we? I mean, that's really been the issue. We don't need a new plan. Do the one that's there. Just do it.
Indeed. At least we have some experience now. If you look at the energy sector, there is some willingness that we can demonstrate much more tangibly. We hope that translates into more willingness to reform the water sector, local government, rail and ports more sooner over the next year or two.
Thanks very much indeed, Isaiah Mhlanga, Chief Economist at Rand Merchant Bank.
The Money Show.
The markets.
Chris Stewart's a portfolio manager at 91. Chris, good evening. Interesting to see the SPAR Group, a little bit of confidence for the second quarter. Still finding it tough. To be a retail supermarket at the moment is very tough.
Yeah, good evening, Stephen. SPAR has been through a pretty tough period, culminating, I think, in the trading update that was presented to the market at the end of May, where they were talking to further significant impairments of some of the offshore businesses they're looking to exit, particularly their Swiss operations and their business AWG in the southwest of England. In addition to that, I guess, if you look at the South African business, it's been under quite a lot of pressure. They are up against some fairly formidable competition, particularly from Shoprite and I guess from Woolworths in the food division. That's reflected in pretty tough top-line performance. They seem to be managing costs okay within that business. But if you look at the grocery turnover numbers at about 1.1% in South Africa, it's a fairly clear indication they continue to bleed market share there. And, I think the market looking at the business and saying, well, let's get the offshore operations tied up, the so-called discontinued operations now. Let's get them resolved. Hopefully, they can at least get rid of those businesses, manage the offshore debt that they've got, manage that down. Whether there'll be anything left over to bring the gearing within the South African business back into their gearing target levels remains to be seen. But a turnaround happening at a group level, but it's a slow one. And I think today's share price, something of a relief that there wasn't further bad news. But let's just bear in mind the stock's down almost 25% year to date.
I should just mention, of course, that you work for 91, but their results out today. The JSE market really, really liked it. And it would seem, and we'll speak to your CEO in a few moments, but quite optimistic about the second half of the year. It's been quite a tough time for active asset managers.
Yeah, it's been a tough time. And I mean, ever since 91 listed back in 2020, there's been a confluence of events. First of all, we saw COVID. Then there was, I guess, a post-COVID fairly significant inflation impulse globally, resulting in significantly high interest rates, and high interest rates disincentivized asset allocators from moving into, if you like, riskier assets, or the sort of assets that an asset manager would manage, preferring to sit on the sidelines with cash. And then to the extent that we have seen equity market performance over the last couple of years, it's been very, very narrow, focused in the US markets, and within the US markets, focused on a narrow number of stocks. We are now seeing early stages of that trend starting to unwind, the so-called end of the US exceptionalism trade. Investors starting to look further afield outside of the US, emerging markets possibly finding a little bit more favor, and opportunities for active management increasing as markets and market returns start to broaden. So starting to look a little bit better. Net flow performance in the second half considerably better than net flow performance in the first half. Still an uncertain future. I don't think anybody's popping the champagne corks just yet, but a better outlook than we've seen for quite some time.
And then very quickly, if you can, South Africa's 10-year bond yield below 10%.
Yeah, that's something to celebrate. I think we've seen the South African bond yield below 10 for the first time since April 2022. I think that's partly in response to the fact that we've got a budget through with a reasonable amount of indication of fiscal austerity. We've hinted, I think, that we're going to bring the inflation target down to a single point target of 3% rather than an inflation target range. That's being relatively well received by the bond market. And if you look at what's happening in the US bond markets, possibly again a reflection that investors are looking further afield into markets where there are quite attractive yields on offer. And the good thing about a declining 10-year bond yield, that is really the main building block for discount rates for investors looking at risk assets. So, lower risk-free rate means a lower discount rate, which hypothetically should be positive for stocks, and particularly positive for the more domestically orientated so-called SA Inc. Group of stocks, banks, retailers, and the like.
Chris Stewart, thanks so much. Portfolio manager at 91. Well, more, of course, on The Money Show. We'll hear from Old Mutual about why they want to reform our pension market. That's next. It's just gone 6:30.
Travel is more than just ticking off countries. It's about the people, the culture, the food, the moments. I'm Pippa Hudson, and on Wonder the World, I invite you to join me every week as we explore destinations both near and far, with the help of fellow adventurers who share their unique travel stories. Listen to my podcast wherever you get them.
WhatsApp Stephen
On 072
702
1702.
My question tonight, which supermarket chain do you prefer?
Hi, Stephen. For me, I go to Pick n Pay first because for some reason, I really believe that the Pick n Pay layout in the store, I understand it better. It's simple for me. Checkers will be next because of specials, possibly, but the Checkers layout confuses the hell out of me. Then Woolies, I only go for specific items. So Woolies, I only go there if there's things that I need. Spar is always the last option. In fact, Spar, I only go if truly Spar is the only shop around. Yeah, Spina from Midrand.
Hi. If people think prices are expensive in SA, a couple of the big groups are up here in Zimbabwe, where I'm working at the moment, and Spars here and Pick n Pay are here. And sure, I mean, if you compare them to South African prices, a lot of them are more than double. Most of them are at least a third or two-thirds more expensive. For instance, like I was at home recently in SA, and like a block of Lancewood cheese, 900 grams, was on special for 130 Rand. I think normal price is about 150 or whatever. Here, that same block, if you convert the dollars into rands, it's close to 400 Rand for a block of cheese. It's crazy. Prefer to remain anonymous.
Yeah, sure. Geesh, quite something. I mean, and I have heard stories like that about the situation in Zimbabwe. Your views as well, of course, on 011 8830702 021 4460567.
The Money Show.
with Stephen Grootes, live on 92.7 and 106 FM. Streaming on the Prime Media Plus app.
And DSTV channel 856.
Well, the asset manager 91 reporting today its annual earnings dropping again, partly because, or particularly because, there have been net outflows from its funds. did say it's had a stronger second half and that demand for active asset management is returning. Hendrik du Toit is the CEO at 91. Hendrik, good evening. You reported net outflows of £4.9 billion in the financial year. That's, I suppose, around half the outflows of the previous year. Where is this money going? Why are people taking it out?
Good evening, Stephen. And you had Chris Stewart explain it so eloquently a bit earlier. There was, in the last sort of, since the interest rate increases post-COVID, money moved very much out of what they call risky longer-term liquid assets into fixed income and income-bearing securities and bank deposits around the world, not in South Africa, because in South Africa we didn't have such low rates, which explains the difference in flows as well. And 91 operates on the the end which takes money international from the US. There was US dominance in capital markets and lots of foreign money was attracted to the US. That, I think, is starting to change now. Also, markets are broadening. Markets were very narrow. A few big stocks, even in the US, dominated returns, and it was probably just easier by either buying them or a passive index. So that was the change. So for us, there's a demand change that we're starting to see. Now, this is very early stage. Secondly, those who have performed well through these very rough times will probably be rewarded. Our investment performances are intact and looking pretty solid, particularly on the international and emerging market equity and debt side. So, and we came through all of this, which was probably the toughest environment that asset managers have. I've been in this game a long time, and this is one of the toughest environments we faced, with higher assets under management than when we came in. And in fact, we reported our second highest number in our history. So at the year end. So in that sense, we are fortunate, but it was a pretty tough time.
You suggest demand came back in the second half. You said things are better for active asset managers than they were. Where is that demand coming from?
Well, put it that way. There is more demand. What we saw was more interest in liquid, active investment management services. Now, it's an early stage, but there are some confirmatory data in our peer group and in other investors, and I'm talking again the non-South African part of the business, largely because the market had indigestion of over-investing in private assets, particularly private equity, and it couldn't access the liquidity in the volatile times, and now there are some higher allocations coming towards liquid, but still equity-like assets. In the debt side, private credit continues to grow. So, in that sense, we were just a beneficiary of we're starting to be a beneficiary of a reappreciation of what it means to have liquid equities in your portfolio, and not just index, because there are opportunities, and we have delivered some of the alpha over the period. There are opportunities to have alpha on top of just the market index. So, it's a very competitive business, but we sent, and what we signaled today was a better operating environment, but a long way off from, boom times we have experienced in the past.
You've opened new offices in the Middle East. You mentioned today that power is and you've just referred to it again, power is sort of moving from the US, and I presume you kind of mean towards the East and China. How quickly is that move happening?
I mean, and again, it's not negative on the US, because the US is a phenomenal economy with phenomenal opportunities to invest in, and still about 2/3 of the world's investable capital. But the size of the economies outside what we call traditionally the developed world, call it the G7 countries, is growing on a relative basis. Today, China is already the largest economy in the world on a purchasing power parity basis, measured in pure dollars. It's the second largest. India is growing in leaps and bounds. The Middle East, where we've set up offices now, you've got growth rates, 3, 4, 5 times the South African growth rate, and it services an entire region from there. So there's a man called Danny Kwa. He's a professor here in London. He publishes something on his website, which is where's the world's economic center of gravity, and that is steadily drifting east, or has been for a long time, and will continue while India rises to probably Chinese levels. So this is just a process that's going on, and I think intelligent investors expose themselves through it, either through very large US or European companies, or they buy directly in the business in these areas. And also savings pools are growing there.
Sure. Hendrik, the situation in South Africa is still a very important base for you. Are you optimistic about the medium-term future? I mean, we had terrible GDP figures yesterday.
Even that helped to get the bond yield below 10%.
Indeed.
Plus the governor of the central bank's prudence in terms of making sure inflation is not a problem. So we must congratulate him, actually. But we are South African. We started our business in South Africa just over 3 decades, almost 34 years ago. We have a big business there. We are committed to South Africa, and we run a very profitable business there. When you look after well over R1 trillion of South African savings, you have a responsibility. So the Sanlam transaction we announced last year, which is in process of getting regulatory approval, that would mean 91 investing approximately 5 billion rand back in South Africa. So that's where your answer is. Am I optimistic about, or am I happy that South Africa is on the right track? Absolutely not. I think we can make a good living in this industry we're in, but our country can do a lot more. Is it better than what it was 2 years ago or in the Zuma years? Infinitely so is the answer. So we are on a track that has been improving, and we see opportunities in our industry, but we can do so much more to deliver better results for the citizens of South Africa and give them a better life. And I think that is separate from the 91's investment decision to serve its market better in its home market.
Hendrik du Toit, I really appreciate the time. Thank you. CEO at 91.
The Money Show with Stephen Grootes is brought to you by Absa Corporate and Investment Banking. Absa is a proud lead sponsor of B20 South Africa 2025.
An important report in Business Live today suggesting that Old Mutual is proposing government could reform our pension industry to make sure you have more money to retire on. The suggestion seems to be South Africa should move to what's called a collective defined contribution scheme that will give you greater security. Blessing Ortete is the managing executive of Old Mutual Corporate Consultants. Blessing, good evening. I really appreciate the time. Firstly, what's the difference between the system we have now and a collective defined contribution scheme?
Good evening, Stephen, and thanks very much for having me on your show. Maybe just to clarify, I think the industry has just gone through significant changes, and by no means are we saying we need urgent change of the policy now, but we are saying that system needs to evolve. And maybe just to explain what we've got at the moment, the defined contribution system, as we know it, is really the cornerstone of South Africa's retirement landscape, and there's good reason for it. It really offers scalability, efficiency, and also individual ownership of retirement savings. And effectively what it is that it is a structure in which members provide for savings of their pots of money, and that value then rises or falls depending on investment returns and contributions made and various other factors. Now, the collective defined contribution system is a system that allows individual retirement funds to pool investment risk across the members to ultimately provide better outcomes for members at retirement.
Okay, so for example, and there's sort of famous stories, I don't know if they're true, that, people panicked. For example, they were retiring at the beginning of 2020. They panicked because the markets plummeted at the start of COVID, and they took all their money out and had are having a very poor retirement as a result. It's to kind of stop that kind of thing happening. People would be protected in ways that they aren't right now.
Yes, and I think that there's a couple of things that happen in the scenario that you're mentioning at COVID-19. So at the time, markets crashed. There was a significant downturn in the markets, and at the same time, interest rates started to also fall, which meant that the retirement savings of individuals in asset value were dropping, but the cost of purchasing annuities was going up. Now, what this collective defined contribution scheme is effectively, it allows the smoothing of the longevity and the investment risk, so that members can actually get targeted retirement benefits as an outcome.
From what you say, it seems almost that there's no argument against it.
No, not really. I think really we're talking about an evolution of a system, and that does take time. There are some good things that are certainly in our defined contribution arrangements. One of the things in a collective defined contribution scheme is that it only allows for one sort of investment strategy, and we know that in South Africa we've really advanced to allowing sort of members to choose their own portfolios and bear their own investment risk. So you're going to need in an environment like that to think about how do you still retain some of the benefits that you have and the structures that you have in the defined contribution structure, and also harness the benefits that we're seeing across the globe in collective defined contribution schemes.
So few people in South Africa are saving enough to have a comfortable retirement. I think it's less than 6%. Are there other reforms we could introduce to increase the number of people who are in the pot?
Yes, certainly. I think that is one of the reforms that government has already mooted, which is it's popularly known as auto-enrollment, where we're saying let's get more people in the retirement net. We know that outside of the sort of formal net that we have, there are many people that don't contribute to retirement funds, even though there are retirement funds that the employers provide for. So sort of making enrollments into retirement funds sort of part of the system would increase the number of people that are in the fold, and generally give better outcomes for members at retirement. So certainly that is one of the reforms that government has spoken about, and we really are looking forward to more regulation coming around auto-enrollment.
Blessing Otete, thanks so much. Managing Executive at Old Mutual Corporate Consultants. You with The Money Show, 7 o'clock.
And now, The Money Show
with Stephen Grootes on 702.
Let's walk the talk.
The Money Show with Stephen Grootes is brought to you by Absa Corporates and Investment Banking. Absa is a proud lead sponsor of B20 South Africa 2025. Plenty coming up. How to change careers kind of midstream. If you want to do something different with your life, we'll give you some advice on how to do that in a moment with Business Unusual. We'll talk about a new wine bar, a South African wine bar, that's opened in London. Don't forget Wendy Noli, your consumer ninja. And he's already here, in fact, and you'll hear from him after 8:30, after 7:30. Your shapeshifter this evening, Peter van Binsbergen, the CEO of BMW Group South Africa. Lots to talk about. As someone who's worked here, someone who, if I read that website correctly, worked at Eskom, also someone who's worked in Munich and worked in Japan. We'll talk a little bit around culture and how you do that. Really looking forward to that conversation, how you lead people from different cultures. I think it's going to be a really important conversation. So I think that's going to be quite interesting. So looking forward to all of that this evening. I saw a comment today. It was an interview on Bloomberg by the finance minister, Enoch Godongwana, and he seemed to suggest that he hadn't really got a direction in terms of which way he wants to go when it comes to whether or not he is going to suggest that we lower the inflation target. And it's a little bit murky, but essentially he would make the decision as the Minister of Finance. He would sort of tell the SA Reserve Bank to go ahead and do that. He says he doesn't yet know. And I kind of thought, politically that's probably the wise thing to say. But I kind of think at this point in the conversation, when we've been talking about it for so long, I suspect that maybe he does have a view one way or another. 011 8830 702 021 446 0567, and of course voice notes this evening on 072 702 1702.
The Money Show.
Business Unusual.
Business Unusual is brought to you by Business Outsurance. Trust the experts in business insurance. Switch to the business insurer where you always get something out. Visit outsurance.co.za to switch and save today. So I don't know how your career has been. More and more people have the scientists would call it a non-linear career. You change direction, you do different things. You sell insurance, you sell cars, then you become someone in the mechanics pool, then you move on to something completely different. There are plenty of examples. I think often the real problem is how you make that first move that maybe can be what is quite difficult. The CEO of Jackhammer Global is Debbie Goodman. Debbie, good evening. Really appreciate the time. So I can imagine quite often someone wants to change direction. They're kind of tired of it, or they see a better long-term future in another industry. But first, you need your first job in that new industry. How do you convince someone to hire you?
Such a great question, and it really is the trickiest part of making those transitions. And firstly, let me say that as somebody who mostly deals with people who are at an advanced stage in their career, I almost never encounter people who, unless they're a doctor or a lawyer or an actuary, who are actually doing a job that is entirely aligned with what they even studied. I mean, the meandering paths that people take in their careers is pretty astounding. And we're no longer in this world where we're in a job for life. That being said, it may be quite difficult to jump entirely from one industry to another where there isn't an obvious link. And so I sometimes encounter people who, let's say they're in the manufacturing industry and they're thinking that becoming an investment banker sounds cool and sexy. And I need to unfortunately explain that to make that kind of transition, unless they're in a role that is kind of easier, like if you're doing human resources or potentially marketing, maybe, but if you're in a technical expert role, to make a career jump where you haven't either studied for that line of work, or you haven't been immersed in it in some way, is going to potentially be a step too far. That being said, I'm the first one to say big moves are possible. So what I do encourage people to be, on the one hand, is somewhat realistic, but then to also figure out how do they take their first bridging step. And that bridging step can be made in a number of different ways. I can go into that in a bit more detail, but I'll pause now.
I would imagine there also, you need to know a little bit about the direction in which you're going. So you need to know something about it, but you also need to choose quite carefully. You might need to start in a slightly sort of lower position, maybe in a smaller space, just to get to know it a little bit, to learn it. And also, and I say that because bigger companies are often quite strict about how they decide who to employ.
Yes. So let's talk about some tactics. So let's say you're wanting to make a career transition. Let's say it's not entirely unfathomable that you'd be able to go from one industry or one type of role into another. You may not be able to move upward in a career trajectory. You possibly are going to have to either move laterally or even perhaps take on a more entry-level role that will allow you to make this bridge. And so we do see that. Is sometimes people say, I'm so passionate about so-and-so industry, and I'd love to immerse myself in that. And so I'm prepared to make some sacrifices in order to do that. The best way to actually make these career transitions is to do it in a smaller company. And so that smaller company may not come with all the bells and whistles, may not come with all the benefits, may not have all the health insurance and life insurance and all the things, but it is going to more likely give you a chance to step into something that's not perfectly aligned with what you did previously. And it's also potentially going to give you an opportunity to multi-hat and to take on different kinds of functions and roles within a smaller environment. So I would always recommend that if you're going to if you're going to think about doing something that's different to what you've been doing your whole life or your whole career, is start in a small company. It's going to be your best opportunity, and you'll probably be able to add value in some way, even if it's not entirely a job that you've done before.
I would think that any organization that really wants to do well would really benefit from having a diversity of experience. And that would include having people who once did, something completely different. Yes, you now work as a sort of lexicographer, but one of you was once a captain of a cargo ship. I mean, that kind of experience can come in helpful in all sorts of ways.
Stephen, one would think so, and one would think that would be the attitude and approach of hiring managers. But unfortunately, people are kind of, they like things to make sense. They like to tick boxes. And in many instances, I do encounter a little bit of rigidity and narrow-mindedness, maybe sometimes a lot. a lot more than I'd like. I always look for people who've just got flair and talent, and they've done something that I can see. They put their heart into it and they work their backsides off and they did amazing things. Those kinds of people are going to be great wherever they are. But unfortunately, when it comes to hiring, particularly at senior levels, organizations do want to be able to see that a career made sense from going from one step to the next step to the following, and also that they have got a certain types of skills and experience that would be so-called foundations or building blocks in order for them to do the next thing. And frankly, they're not entirely wrong, but I do see that companies miss out on amazing talent because they look at the job skills, that the work experience that this person had, and they put way too much of a priority on that versus has this person really excelled and have they shown themselves to have been adaptive in the past? Those people are going to be able to meld and change in the future for sure.
Debbie Goodman, really appreciate the time. Thank you. CEO of Jack Hammer Global. Do you own a business that supplies plumbing, electrical, or the general tradesman services? Then the expertise of Business Outsurance is just what you need. Switch to Business Outsurance and you could get a massive 20% discount on your business insurance premium. It's quick and easy to get a quote. Call 08600 60,000 or visit outsurance.co.za. You always get something out. Licensed insurer and FSP, TCs and information online.
7:02. Stephen is on The Money Show.
6 to 8 p.m.
So one of the best places in the world to sell wine is in London. It's a massive city. There's plenty of money flowing in and around it. It's also a very good place to sell South African wine, which is why I was so interested this week to hear there's now an exclusively South African wine bar in London. It's called, of course, Igoli Bar, Cape Town. It's in the West End. It's part of a theatre complex. Ella Spera is a partner at Igoli Bar. Ella, good evening. What makes this wine bar so different? Is it just about selling South African wine?
Hello. No, I would say it's about so much more than just selling South African wine. We're wanting to kind of pair this, what has been a real true discovery of wonders for me in how fabulous some South African wine, in fact, many South African wines here are. And we want to kind of pair that with the audio-visual experience of the show and the paintings and the whole overall space, and in a way that is kind of truly continuing our celebration of South African culture across to wine, and also, in fact, cocktails. So we have gone about sort of finding the right wonderful partners here to elevate this experience, and have taken time and effort to really dig into which winemakers and why we should be celebrating and spotlighting in this space. And we've gone for we're using the word fine wines because we truly believe these are all exceptional, top-notch wines, and we've also established a kind of point system with the very brilliant Michael Fajon. And we're looking to kind of spotlight and celebrate smaller batch winemakers whose ethics and morals align with ours. And it's been an incredible journey already.
Hard to go wrong with Michael Fajon. We know, in South Africa, one of the great joys of living here is that you can get really good wine for a really good price. Not quite the same in the UK. How does the pricing work?
Well, I think this is one of the things for us, actually. We do want to help educate our audiences on how fantastic these wines are, but also with the price point consideration, I can say hand on heart that I truly believe the wines that we can get here and the quality and the artistry that goes into the wines are right up there with some of the best wines that I drink from France and Italy and Spain, and actually they are more economical in terms of price point for the UK. That is not the reason for it for us. For us, this is about, celebrating these winemakers and these wines and wanting to add another layer of education to our audiences, including, for that matter, actually, on vintages. So I think there's this overall view that, its new world, I say in inverted commas. And I recently drank a 1988 Zonneblom Shiraz, and it was absolutely sublime. So there's also that side of it that we want to roll in, that we think just adds further weight to what we're saying about South African wines and how we're elevating them.
Ella Spira, really appreciate the time. Thank you. Partner at the Igoli Bar. Next time you're in London.
The Money Show.
Consumer Ninja.
Well, time, of course, to hear from Wendy Nola, your consumer ninja. And one of the things that we've talked about in the past is what happens when you're in a very difficult situation. Someone literally has a gun to your head, or someone you love, and they say, get out your banking app and transfer money to me. And we've known in the past that the National Financial Ombudsman will side with your bank if you decide that you have to do that. But Discovery Bank decided to create what's called a panic code. Someone who's in that position would be able to tell them through the app, and that then would basically be able to help them to prove that they were doing this under duress. So you would think this would work. Wendy Nola, good evening. This sounds like a win. How's it been panning out?
Hi, Stephen. Apparently, it has been a win for quite a few clients. The bank's obviously not that keen to give out too much detail, but it has worked. Your secret code that you have previously chosen, and that's by agreement with the bank, that's what you'll use if you're under such duress as you've just described. That will trigger. The fraud department will get it, and then they can alert the police and private security to find you by means of GPS on your phone. And apparently that technology has saved a few of their clients from losing their money, etc. But I was thinking, Stephen, I don't know about you, but I can barely remember, not barely, I won't exaggerate, but sometimes, occasionally, I struggle to remember my actual codes for my various cards that I use regularly, because you're not supposed to have the same codes, right? You're supposed to have different ones. And I'm thinking, if I had a gun to my head and I had to now remember a code, a secret code that I chose however many months or years before, I don't know that I would, but as I say, happily, it has helped quite a few Discovery clients.
I mean, I know in some cases experts actually say you need to practice dialing the emergency phone number, and it sounds silly, but actually it makes a lot of sense if you think about it. You need to practice it, and this is maybe something you need to practice. Are there a couple of issues banks haven't foreseen?
Yes, exactly. This is not something that you should practice, right? Because apparently people are being, again, I don't know the exact number, but I think it's significant, but, have been curious, either sort of standing around the braai and talking about it and deciding, let's see if this works. Like, can my tracking company actually track my car kind of vibe? And they've entered this panic code in sort of transacting, or they've done it by mistake. So my News 24 colleague, Maya Fisher-French, recently reported on the case of a Discovery Bank client she called Stuart, which is not his real name, who mistakenly entered his panic code, while transacting. The next thing, an ADT guard arrived at his property, and he was initially really impressed at the response and how quickly it had happened, but he was less than impressed to learn that Discovery was charging him a penalty fee of 1,000 Rand for so-called misuse, which was actually a discount on the full penalty fee of 2,000 Rand because he was the first offender. What makes this story truly remarkable is that it didn't end there. Shortly afterwards, Stuart was talking his advisor through what had happened, and he made the same mistake again, and the same response happened, and he was then fined 2,000 Rand. So now he's 3,000 Rand down. And not very happy. He said he didn't see the T's and C's on that particular penalty fee.
I can imagine. How often does this sort of misuse thing happen? I mean, are they telling us how many people they're finding?
No, of course I wanted to know that, but the banks, they're not big on giving out that sort of stats, but they are on the disclosure issue, which was the one that I was interested in. They say, when you set up your codes, you need to accept the T's and C's. The first bullet point is about the fee, and then in the final screen of that process, you're also reminded to do it. And then once you've set up your codes, the bank will send you an email again reiterating that you may be charged a fee if the panic code is not used, is used when not in a duress situation. In other words, you're abusing it. So I think it's fair enough. It's a side effect of, I think, people's curiosity and making a mistake. I would imagine, as long as it's in the cases when it's needed, when it's put in correctly under duress, it is helping people. That's a good thing. And I also said, would that fee actually cover the cost? It's not a cheap exercise to instigate such an emergency response, and I'm told no, sometimes it wouldn't cover it. So, fair enough.
Yeah, it's an interesting one, and I mean, at least someone's trying to do something. Are other banks trying to follow this? I mean, if it works for Discovery, I mean, it's a wonderful selling point. You can think of the ads.
It is, and I think it's a very. I think all the banks are scrambling to come up with solutions. Discovery has patented its panic code thing. They also don't have ATM, so they didn't need to solve for someone being forcibly taken to an ATM and made to withdraw cash up to their withdrawal limit there and then. And I've had many people telling me that this has happened to them. So there's smaller amounts, but it's very significant to them. So it'll be very interesting, I think, to see what other solutions the other banks come up with. And then, of course, they can't just come up with a solution and leave it there. These crooks are very clever and very quick to pivot, so the banks are going to have to continually make sure that they are one step ahead. And they also, I don't want to say too much about how the whole thing works, because the criminals are listening too and taking notes.
No, I can just imagine. Wendy Nola, thanks very much indeed. Really appreciate that. Your consumer ninja on The Money Show.
The Money Show
with Stephen Grootes, live on 92.7 and 106 FM. Streaming on the Prime Media Plus app
and DSTV channel 856.
Mbali made well talk a little bit more about this in the news, but it was interesting to see Parliament's Finance Committee passing the fiscal framework so quickly and easily today, compared to all of the fuss and the snot and the trana and the noise and the sometimes, frankly, nonsense coming from the political parties, sort of almost all of them, really, during the period when there was that dispute over the budget. And sometimes, and this is quite a strange thing about life, there will be times when there's lots of shouting and screaming and everything's building to a climax, and it doesn't end with a bang. It ends with a whimper. And in a way, I think that's what's happened with the budget process. And good. I mean, we need a budget. It shouldn't be argued about constantly. We need to know where money is going. And that seems to be what's happened. It's just gone 7:30.
The Money Show.
Shapeshifters.
Well, it's not very often we get to present a shapeshifter like this to you, someone we've actually been chasing for a little while. You can imagine how busy diaries are. Finally, diaries and stars and load shedding and all sorts of other things have aligned. And I'm pleased to tell you that sitting opposite me in our studio is Peter van Binsbergen, the CEO of BMW Group South Africa. Peter, it's really good to meet you. Thanks very much indeed for coming in. I really appreciate the time.
Evening, Stephen. Thanks for having me here.
I was really intrigued. I went to go and find the press release that was released when you came sort of here and back to South Africa. And it made quite a lot of the fact that BMW's been in South Africa for years. I mean, decades. You're the first person from South Africa to actually run the South African network.
Correct. I'm the first South African CEO. And we have a history of 52 years of BMW in South Africa.
Were you a little surprised to find you were the first one?
No, I mean, we're a multinational German company, and very often in the past, the senior management came from Germany. But it was a real privilege for me because I started at BMW basically as a graduate here in South Africa. So to come full circle and come back here after 18 years abroad as CEO was a wonderful experience.
I was, as you do, spend some time on the internet. Let's look up this person. I was not expecting to find the company name Eskom. And I almost wasn't entirely sure. Maybe there was another guy. Is that true? You worked at Eskom?
It's true. I'm a mechanical engineer. I studied at UCT and I had a bursary with Eskom. So my first few years were at Eskom. But I'm happy to say it was the time when Eskom had excess power and we were actually mothballing excess power stations.
So we mustn't blame you.
No.
Mechanical engineering, and I know there were a lot of people during that time who went through university thanks to Eskom. There were a lot of Eskom bursaries. And I imagine the WhatsApp group would be really interesting if there was such a thing. Was mechanical engineering always something you wanted to do? Is that what you sort of grew up looking at?
Yeah, it was. In school, I already knew I was going to do mechanical engineering. My dream actually was to become a mechanic. My parents said, no, get a degree and then you can always become a mechanic if you want to. So I said, okay, it will be mechanical engineering. And then I was so fascinated by it, I actually ended up doing a master's degree also in mechanical engineering in engine design, also at UCT.
Sure, an engine design. This would have been petrol, diesel engines at the time?
That was a petrol engine. Yeah, I designed the engine and actually built it and tested that ran a different cycle to the average internal combustion engine.
Sure. Does that still, I hate to use this phrase, get your motor going when you think about things like that?
I enjoy technology. I love anything with wheels. I've always loved things with wheels, whether it's a skateboard, a car, a motorbike, a bicycle, and I still love cars and bikes.
One of the things that you ended up having to do, and I imagine this might have been among your first role at BMW, was explaining sort of mechanical terms to, marketers. They're closely related to journalists, so they're not always the brightest. Was that quite tough? I mean, that's quite an interesting thing to sort of try and sell what this engine is doing.
Well, when I joined the car industry, it was my dream, and I thought I was going to be an engineer and design stuff. And then doing exactly what you mentioned, explaining our technology at events, at launches, with journalists and with customers, I discovered that actually sales and marketing was far more exciting than engineering. And that actually was the turning point for me to make a career in sales and marketing. And I moved into marketing after doing that first job, did an MBA, and have stayed in sales and marketing ever since.
There can't be many people who started as a mechanical engineer, designed a sort of rare stroke engine, and then ended up in marketing. What was it about that was so interesting for you?
I think it was the pleasure of working with our products and working with people. I looked at engineering in our engineering center in Munich called the FITS. There were about 5,000 engineers at the time. And I visited it, and one of the engineers said, you're never going to design a whole engine here. You'll design one little part of it. And I actually realized that in the sales and marketing arena, you worked with the whole product and you worked with people. And that actually was what kept my motor running.
So, I mean, I was intrigued because you spent quite a lot of time in Japan. And it's quite, I mean, if you're going to look for two countries that are the most different in the world, you kind of think, well, Japan and South Africa. I mean, they did beat us on the rugby field that time, and we had to go there and win to sort of get that out of our memories. But what was that experience like? It is, I mean, I've never been there. I know very little about it, and everything I do know comes from a kind of Western culture. But my imagination suggests it's very different to South Africa, and here you are trying to sell cars in Japan.
It is extremely different to South Africa. I went to Japan via Germany, so I left South Africa to go to headquarters. I worked there for a year, and they said, please come to Japan and do the marketing area for BMW Japan. And you can imagine marketing at that time involves a lot of above-the-line communication, so TV ads, newspaper ads, and I couldn't speak a word of Japanese. So the big challenge there, of course, was you had to learn to work with trust. You had to trust your people that what you were advertising, what they told you were saying, you were actually saying about the brand. So I actually learned a lot about leadership in that time in Japan. But the culture in Japan is completely different to South Africa, to Germany, to anywhere. And I think what I found was it was a time for me to learn how to work with different cultures, how to bring BMW-ness to the company, whilst at the same time understanding how Japanese people think and how to actually bring those messages across so that it actually resonates with Japanese consumers. And you learn a lot about intercultural activities in doing something like that.
I mean, I think South African managers, if they aren't already, will be the best in the world at doing that for various reasons, the sheer diversity of our country. How do you lead a team of people in a situation like that? You're seen, and I mean, you know, the phrase from headquarters, which lots of companies have that phrase, you know, from headquarters, and it's not always a very positive phrase. How do you sort of lead a group of people in that situation? You know, you've got to rely on them. You don't, there'll be things that will surprise you, and you'll think after a year, well, nothing will surprise me, and then something will. I mean, that I think happens all the time. Where do you sort of start in a leadership role in a situation like that?
Well, I think I wasn't from headquarters as such because I actually was from South Africa and I'd only spent a short time in headquarters. And so the key there was I came with BMW South Africa knowledge, and I was actually bringing knowledge from one market to another. And BMW South Africa has always been a leader actually within our company. We did the greatest ads in the 80s and the 90s, Beat the Benz, one to just mention.
It came straight to mind, yes.
Exactly. We did the most amazing launch events in this country. The Concorde event when we launched the 3 Series back in the 90s. We invented Motorplan. So the maintenance scheme that almost any brand offers nowadays, the first market after South Africa to launch it was Japan. So I think BMW Japan had a certain respect for BMW South Africa. So coming across, I came with ideas, but I did a lot of listening. And I think when you listen to people in their culture and first understand their culture and how things work here before you start telling them how you think they should be doing things, you can also gain their respect.
Did it help that you were selling cars, and particularly a car with the brand power of BMW?
Of course, that helped. BMW in Japan was really an exotic imported brand. In fact, many Japanese people in those days actually, even though it's a right-hand drive market like South Africa, ordered a left-hand drive BMW because then everybody could see it was an imported car. So the brand power of BMW, of course, was seen as quite exotic. And in that sense, also coming from South Africa, coming from the headquarters, and we were actually exporting cars from BMW South Africa to Japan at the time I was there. There was the synergy between where I came from, having come from headquarters most recently, and I think that worked well together.
It's interesting because when you are doing something like that, you really are trying to speak to people in a particular way, and that usually requires some form of language. There's lots of visual things you can do, especially with car advertising, especially during that time. But I do think the brand of BMW has a particular power that very few other brands have. Is there a particular secret to that? I mean, the idea that, people are buying, the wrong-hand drive ones is fascinating.
Yeah, the brand of BMW, of course, has its roots in our claim of sheer driving pleasure. So we've always produced cars that give a very distinct driving characteristic. And that was actually the whole theme behind Beat the Benz, right? A car that stays on the road. Active safety, if you want to call it that. But sheer driving pleasure is something that resonates extremely well in a country like Japan. I mean, the people there are very passionate about cars. They've always been. And so you bring a brand with sheer driving pleasure, and I spent literally hours with the ad agency explaining this DNA of BMW, and then they came with the ideas. How can we communicate this so it resonates with the Japanese consumers? And that worked really well.
You spent some time, of course, in Germany, I think before and after your stint in Japan. And you came back to South Africa in your new job. Well, your new job, come on, Stephen, 4 or 5 years ago, just at the end, just as the sort of hard lockdowns were ending, really rough time to come back to South Africa. I mean, it would be nice to have you, enjoy your lockdown, and here's some load shedding.
Yeah, my wife and kids actually flew in on the first flight out of Germany after lockdown.
Sure.
I came a little while later and started working then on the 1st of Jan 2021. What's really interesting is I got to know my whole new team, because many people had changed with masks on. So once the mask wearing had stopped, I had to start recognizing people again, because a face with a mask and a face without a mask is really quite different. But it worked well. I mean, I think South Africa handled some things of lockdown quite well. We were in teams working together with, distancing and so on. But we managed to see quite a bit of each other, even physically, even though it was still lockdown. Of course, when you were at home working and you had load shedding, it got really complicated.
No, that was very difficult. Was there something about the South African job that particularly attracted you? I mean, yes, you're coming home, and that must have been quite powerful. Are there particular challenges or interests or something that struck you that as interesting to come back?
I think the biggest attraction for me was the opportunity to really run a small company, relatively speaking, far away from headquarters with a lot of autonomy, and actually be an entrepreneur. Because all my previous jobs, I'd either been in very big parts of the company, I'd been right in headquarters where you're totally linked into the politics. You spend most of your time in meetings, actually. And the chance to come to South Africa, come home, as you say, but to run a company, and a company with all the facets, right? We have sales and marketing here. We have a factory here which produces cars for the world. We have an IT hub here producing IT for the world. So it was a wonderful opportunity to be an entrepreneur in a big company, and the buck stops with me. And it was the first time in my life that I actually had that in the BMW world, and that was really exciting opportunity.
I do need to ask you about a present-day problem as the CEO of the BMW Group in South Africa, which is the US tariffs. And sort of quite famously at the moment, if you're American and you want to drive a BMW X3, it will say made in the Republic of South Africa on it somewhere, I presume. And that means that you must be affected by that. That must be very difficult for you.
Luckily, that's not 100% correct because the X3 is also produced in the USA. So our factory in the USA in Spartanburg is our biggest single factory in the world, and it produces roughly 50% of all the cars that are demanded in USA. So mainly our SUVs, X3, X4, X5, X6, X7. We do export in some periods of the life cycle to the US. But right now, we weren't exporting to the US anyway. So to be honest with you, the current situation has not affected BMW South Africa at all. Our plant is running at maximum capacity, and we're actually working together with labor to add additional shifts on the weekends so that we can meet worldwide demand. So we're in a good space right now.
I'm pleased to hear that because the reporting seemed to have been that actually we should prepare for trouble. So are you expecting then that there'll be more demand worldwide for cars for BMWs that are being made here? That's why you have to work on weekends.
Well, it's an interesting combination. Firstly, the X3 is the best-selling model in the world and in South Africa for BMW. The new X3 is very successful, so we have very high demand anyway. But what you're seeing now is some countries that have these reciprocal tariffs with the USA are calling into South Africa saying, can you supply us instead of the US? So actually, at the moment, we can't keep up with demand.
Sure. That's very interesting to hear that. I mean, it seems to me that what's happening in the sort of White House is going to affect global trade in all sorts of unexpected directions. A company like BMW South Africa, are there sort of unexpected opportunities that are coming from it then?
There will be for BMW South Africa, I'm sure. I think global trade flows will change once the dust has settled. I think right now there's a period of negotiations going on. But once the dust has settled, there will be different flows of products from different plants in the world to different markets than there were a year ago. And there could be opportunities for us. It's hard to predict right now because we don't know how it will end up.
Your shapeshifter this evening is Peter van Binsbergen. He's the CEO of the BMW Group South Africa.
The Money Show with Stephen Grootes is brought to you by Absa Corporate and Investment Banking. Absa is a proud lead sponsor of B20 South Africa 2025.
The Money Show.
Shapeshifters.
Peter van Binsbergen is the CEO of BMW Group SA in our studio now. Peter, I'm obviously not going to ask you which brand of car you drive. I'm going to ask you, if I may, what kind of car you drive. And what I'm really interested in is the huge transition we're seeing in the industry at the moment from sort of petrol and diesel driven cars to electric and hybrid cars, and how you see that moving.
I personally drive every drivetrain we offer. But right now I'm driving a hybrid.
Yeah.
I think the solution for South Africa, if you want to go into a new energy vehicle, a hybrid is perfect. My car does about 70, 80 kilometers electrically on a charge, so I can go to work and back electrically. But on the weekend, if I want to go further, it switches to petrol. And so I think this is a wonderful solution. And with BMW's technology open strategy, we basically try and offer petrol, diesel, hybrid, and full electric in every segment. So the customer can really choose what suits their lifestyle. And I think the hybrids offer great performance. So when you put your foot down, the petrol engine runs at full speed and the electric motor gives you boost. And when you want to drive serenely to work purely electric, you can as well.
Do you foresee a day in our lifetimes when actually it'll be very difficult to buy a petrol or diesel car?
Could be. Due to legislation, not due to customer choice. We see that many brands announced that they're going fully electric and they're starting to backpedal now and are reintroducing petrol and diesel engines to their platforms because they've seen the customer choice isn't going as fast as they thought it would. There'll definitely be certain areas in the world where you're going to drive purely electric. I think the big cities of the world, and that's logical because of pollution and so on. But I think a country like South Africa, a continent like Africa, can't possibly plan to switch to 100% electric in the next decades. It's just impossible.
You have a very difficult and interesting job, and it's an interesting time to do what you're doing. Do you get much time to relax? I mean, do you have particular things you like to do for fun? Are you someone who likes to go hiking? Are you someone who, so many people answer this question by saying they go jogging. Do you have particular things you like to do for fun?
Well, I don't get time to relax. I make time to relax. You can only really work at your peak if you really learn to switch off. And I've learned that through the years working at BMW. I'll give you the standard answer: spend time with the family and exercise.
That's what everybody says.
What I love doing in my spare time, I love cars and motorcycles, like I mentioned. A hobby is building custom motorcycles. So I don't physically build them, but I come up with ideas and have wonderful craftsmen here in South Africa who do the work. I'm a self-taught barista, so I love a good coffee, and so I spend most time in the weekends making coffee for friends, visitors, whoever's there. And sport, of course, is important for your health, but sport also is a lot of fun. So I have a 13-year-old son, and we find time to play football together or go play some tennis together. I love mountain biking. There's plenty to do.
No, there is plenty to do. You haven't got your son into rugby yet, I presume. Someone will work at him.
He's a football fan, so we spend our free time practicing his football.
Many people I've spoken to in the slot will have a moment where something changed, something made them think, oh, I can actually be this ambitious, or I can do this. There's a conversation or an insight that they have. Did that happen to you?
I haven't had a massive sort of career-changing moment. I think the one we spoke about earlier, where I realized I wasn't going to be an engineer, acting engineer, was an important career change in my life. And I think the other probably was when I was reflecting at headquarters, in the midst of, let's say, the matrix of politics, lots of endless meetings, and wanting to actually implement stuff myself a little bit more, where I said, I'd like a job where I can be a little bit more entrepreneurial, a smaller company in the company. And the South African opportunity, funny enough, as I was having the thought, and to be honest with you, I was asking myself, is it time to seek a new career? Have I lived out my career at BMW? Because how can I do something like this in a big company like BMW? Someone said to me, Peter, why have you never gone back to South Africa? And I said, you never asked. And that led to me coming back to South Africa and realizing this dream while staying with BMW.
Pleased to have you. Thank you very much indeed for your time. I really do appreciate it. Peter van Binsbergen, the CEO of the BMW Group South Africa, your shapeshifter on The Money Show this evening.
The Money Show with Stephen Grootes is brought to you by Absa Corporate and Investment Banking. Absa is a proud lead sponsor of B20 South Africa 2025.
I'm not going to bother to tell you what kind of brand Peter is sort of walking towards when he goes to the parking lot in just a few moments. I think you'll probably be able to work that out yourself. But interesting, of course, just to hear some of the lessons and some of the time that he spent doing what he has been doing this evening. Well, good to be with you on The Money Show. We will, of course, be back with you tomorrow. Good evening. It's 8 o'clock.